Hi, good morning, everyone. We will wait for another 1 or 2 minutes, and then accordingly we'll start the session. The session is like one of the big brand.
चतुर
Hi, कोई कुछ बोल रहा था? No worries. So today we have an interaction with Hotel 101. It's one of the brand who's running a hotel chain in all over the world, and we have Dasha from Hotel 101 with us. So yeah, she's here. Hi, Dasha. How are you? Good morning.
Afternoon for me. Good morning to you guys.
Good afternoon. So Dasha will wait for another 1 minute because I believe some more people will going to join, and then we can start. Yeah. Thank
No
you.
problem.
So thank you. We'll start by 11:05.
Okay.
Cool. Thank you. From Delhi NCR, from Varanasi, so many part of country people have already joined here. So we can start with a basic background of the developer, and then accordingly we can showcase the property and the schemes.
Alrighty. Okay.
Yeah.
So
Over to you.
we'll talk about who our founders are. In general, what the model is like, how it works, why it works. And then when we talk about different projects, currently we want to focus on just the two, but many, many more coming up soon. The model will still be the same. It will be translatable from one project to the next as easily. And you don't really need to learn anything new except for what's around that building. So it's very easy to learn and very easy to market. Okay. So our founders are the two billionaires from the Philippines, Mr. Injap Sia and Mr. Tony Tan. They are both self-made men, built their wealth on the fast food chains. Injap is a founder of Mang Nasal, and Mr. Tony Tan, the older gentleman, is founder of Jollibee Group. You might not have heard of Mang Nasal. This is a pure Philippine company. They did not expand overseas, but the Jollibee is a humongous F&B group. Under Jollibee, there is more than just the fried chicken Jollibee that you might have heard of. There's also Coffee Bean and Tea Leaf. There's Highlands Coffee from Vietnam. There's Burger King in the Philippines. From the US, Smash Burger of the US, Tim Ho Wan outside of Hong Kong is theirs. Many, many brands. So this is how they met when Tony Tan bought over Mr. Sia's Mang Nasal and brought it under the Jollibee umbrella. And while they were doing this business together, they were so impressed with each other, they decided to create Double Dragon Corporation that would take care of the real estate arm of their businesses. It's called Double Dragon because both of them are Chinese descent and born in the year of dragon. So this is their year. Maybe that's why we're listing on NASDAQ this year. Originally,
That's why they mentioned that dragon, right?
yes, exactly. Double Dragon, Dragon Year, and the huge IPO is happening in the same year as well. Okay. So their businesses grew really fast because they're focusing on their target audience. They're not spreading their attention too far. They know exactly what their target audience wants. They give them just that and some extras. So in the real estate, the Double Dragon is, by the way, already listed in the Philippines, the Philippine Stock Exchange. And they have assets in a few revenue streams, so to speak. They have malls, they have offices, they have warehousing and hotels. Hotels, not just Hotel 101. They're actually quite experienced hoteliers themselves. They have Injap Tower, that's quite a big one in central Manila. They have Third Ascot in the Philippines. They're master franchisor for Chinchian Inn as well, very big brand, very big chain. So they've done their hotel business the way that other people do it. And they saw that there's a huge gap in the market, that all of these hotels or offices or condos, that gap is just not filled. The gap is between a conventional hotel and a condo that people rent out as an Airbnb. So normally, historically, if you wanted to be in the hospitality business, those are your two options, right? You either have a lot of money and you buy a whole building, a hotel, and run it as a hotel. Maybe you get a brand name like Ascot to run it for you. Or if you don't have that many millions of dollars to buy a whole building, you buy a separate apartment and run it as Airbnb. Airbnb recently has been having quite a bad rap around the world because they're attributed to Airbnb the increasing costs of residential real estate. So local people can't buy because other people buying and running out as Airbnb. So many countries started limiting what Airbnb can do. For example, in Japan, it's half a year only that you can rent it out as and run it as Airbnb. And the other half a year, you need to have a lease. So how many people actually want a half a year lease? It's not a very common thing to have, right? So the owners are stuck with their asset underperforming in like half of what they were hoping for at best, right? In Spain, there's another problem with the residential because Airbnb is still residential title. It's not a licensed hotel, right? They have the problem there with increasing costs of rent, increasing costs of purchase as well, the residential property. So government decided to limit what rent landlords can ask for. For example, in Catalonia, they declare the whole area, that's including Barcelona, right? Very famous place where a lot of people go to buy residential property. They declared it a risk zone. So they can't increase their rent now more than 2%. So they are stuck also because the inflation is higher and the rent increase
is low.
is minimal, exactly,
Yeah.
right? So stuck with that as well. We see a lot of demand in our Madrid property, Hotel 101 Madrid, from locals because of these issues, right? And not to mention the non-eviction situation, right? If someone lives in your house, you can't evict them. They are not paying rent. You still can't do anything without a court order. And to get to court takes years, right? So the locals also are moving away from the residential investment and into commercial, industrial, but those are yielding less than residential. That's why it's still a struggle. And when Hotel 101 Madrid came in with this model, with this bridging gap, they were very impressed. So a lot of demand from the locals there. Anyway, so the gap is between these two powerhouses, the regular hotel and Airbnb, right? So what our founders did, they decided to sell individual units in a hotel. So we have a building that is being sold like a condo. You are buying individual apartments, but it's run in the whole building is run as a hotel. So theoretically, in Japan, you can buy a unit and stay in it, but nobody would do that there because the revenue, the returns from the hotel operations are significantly higher than if you were to stay or try to rent it out yourself. So we are running the whole building as a Hotel 101 brand. So we are expanding this whole brand globally. It will be one of the biggest brands like Holiday Inn Express, something that you see everywhere, right? And yet it will be individually owned. So best of both worlds. One thing that allows us to run the way that we do is because we only have one type of room globally. So we don't have 2-bedroom, 3-bedroom studio apartments. No, we have one type of room, one SKU. It's called Happy Room. That's also a great thing for you guys because no need to learn multiple floor plans. It's just one, a very simple one.
It is easy for everyone to basically memorize and understand exactly what is the product.
Exactly. And it's the same in Madrid, it's the same in Niseko, in the Philippines, in LA when that launches, it's the same. And what is it?
So Dasha, under the brand of Hotel 101, so what in any country you have any hotel that will be that will be a same size for every hotel in any country, right?
Yes, correct. It will be this Happy Room. We're in fact trademarking the name right now. Not sure whether we will be able to trademark it after all, because it's quite a basic name. But yes, we are the first to come up with this standardization. It's unheard of in hospitality. I see why the question came up, right? Because even those chains like Holiday Inn or Mercure by Ascot, all those, not Ascot, sorry. What am I saying? Mercure is by, oh, I lost the word. Anyway, so another brand. Yeah. 3-star hotels, right? You go different countries, it's a different feel, it's a different room. Even the 5-star hotels, they have very different feel. I was just in KL over one weekend, and then I went to Surabaya just the same week, right? So I was staying in Shangri-La in KL and in Surabaya. I couldn't find the light switches. The aircon control is different. I don't know where's what. I spent like half an hour trying to figure out my room. And that's in the huge brands that have
Right.
the whole design, right? So even they don't have standardization to this level. But for us, it's important because this kind of standardization means that wherever once a person stayed in Hotel 101, they've enjoyed the facilities and the amenities in the room that I'm going to cover in a second. They know exactly what they're going to find. When they go to the next, some other place in another country, the first thing they will do, they will look up, is there Hotel 101 there? All this standardization ensures high occupancy levels. And not just because we're standard, right? Because of what we actually give them. So just like with the businesses in F&B, our founders found this, secret recipe, so to speak. When they know exactly what their target audience wants, or more like needs, and they give them that precisely, and add on a few twists that make a difference. For example, in Mang Nasal, the Injap's brand of grilled chicken, he added free flow rice. No one else done that, but his target audience appreciated that twist so much, right? They can have all the rice they can eat with that chicken and be full for the same very minimal increase of price, right? So the same here. What we have is essentially a 3-star hotel room, this value segment. There is a reason why it's a 3-star. Those guys, the billionaires from the Philippines, they, God knows, have the money to go into luxury and ultra luxury, for sure. But they didn't. They didn't go the other side of the spectrum either. The 3-star is the one that is in demand, always, in good times and in bad times. In good times, the budget travelers, they splurge a little bit, they go in a 3-star segment. They still can't afford the 4 and 5-star, but 3 is very comfortable for them. In the bad times, those 4, 5-star travelers, they don't stop traveling. They have to. It's a right. COVID proved it to us. It's no longer a luxury to travel. It's a right, right? So in the bad times, in a little bit financially restricting times, they would economize and they would go in a comfortable 3-star segment, especially in the places that we are selling right now. In Niseko, in Japan, people go to ski, to snowboard, to play golf in the summer, and do their mountain biking in summer as well. They don't spend time in the room. So we hear this a lot from the buyers who are usually like 5-star travelers. They go like, oh yeah, in Niseko, when I go cheaper because I don't need the room. I don't spend time in the room at all. In Madrid, this is the same thing. We're mostly looking at business travelers there. They are also not in a room. There is no time to enjoy it, right? And in some financially restricting times, the companies might reduce the travel budget a little, but again, they won't stick them in a dorm. It will still be a 3-star segment, right? The comfortable type. So the 3-star segment is the one that's always in demand in good times and in bad times. And because our target audience, those people who are buying our units, are those investors who want to have a 1 unit in a hotel. So they have this little pot of money they saved up. They want to be as safe as possible. In the hotel, they have to have higher occupancy, as high as possible, right? That's why the 3-star segment is important to us. This value segment, the
Right.
one that is mostly in demand, right?
But basically, this is a mass thing because mostly people are looking for these kind of rooms in any country when they are visiting for travel. So they're looking for a room where the budget is like a limited thing, and accordingly they can use that the same services which what they are getting in 4 or 5-star hotel.
Exactly. Yeah. Okay. So this is the what is basic minimum, I guess, for the 3-star travelers. Everything you would find here. Say TV, bathroom, bed, what else? Bedside table, the study table, all those things. Everything is there. Plus, we give them a few twists. Instead of 19 square meters, which is somewhat of a gold standard in that value segment, we give them 21. We can't go any bigger because we have facilities. Every single Hotel 101 globally would have swimming pool, would have gym, restaurant. These kind of facilities are usually seen in 4 and 5-star segment. If our room any bigger, we'll be in those segments where we don't want to be for the reasons just mentioned, right? So we have to limit it to 21 square meters. Second twist is 3 sleeping spaces, not commonly found in 3-star segment. Can be found, but not very frequent, right? Simply because they don't have space in a normal 3-star segment. 19 square meters just doesn't allow for 3 sleeping spaces. In Japan, again, our Niseko property is right next door to another one, 3-star hotel. They do have 3 sleeping spaces. So they have 2. The room with 2 configuration is, I think their room is even smaller than 19 square meters. So they put 2 single beds, the metal type, like you have in your university dorms way back when, right? When we enjoyed our life as students. And in the 3 sleeping spaces, they have the same size room, but they put a bunk bed on top of each other, just 2 metal beds stuck together. And they charge 50% more for that room. Just to sleep one more person in there, it costs 50% more. Ours is a standard because, again, who is the 3-star traveler? There are young families with kids, there are young professionals, they usually travel in a group, or families with many kids. They can have just 2 rooms instead of in a regular hotel 3 rooms, right? And there are no additional charges for kids to stay there, because once the kid turns 12, they're considered adult. Right? So they're charged as an adult rate. Okay, but my favorite twist, the third one, is a microwave. It makes a lot of difference for the 3-star budget traveler to have a microwave in the room. And that's unheard of in 3-star segment. You can find it in a ultra luxury or maybe in a dorm, like a common kitchen. But in a 3-star value segment, I haven't seen one yet. But why? I don't know why no one had that thought before our founders did. Because again, the budget travelers, they need to have an option. What they love to have an option. They don't need to, but they love to have the option of not needing to go out and pay the extra money to dine in restaurants. Again, especially in the places that we are currently selling, in Niseko, it's very expensive to eat out. And people go in Niseko for more than a week because it's troublesome to get there right now, right? So they don't go for like 2-3 nights. They go for a week or 2. In Madrid as well, the business travelers arriving at all sorts of hours. I don't want to go looking for dinner at 10 p.m. I just want to grab something and sleep. I have meetings the next day, right? So they appreciate the fact that they can grab something from convenience store, which we also have at the hotel. Every single Hotel 101 globally has convenience store because our target audience is a 3-star traveler. So in all their businesses, our founders are always very focused on who the target audience is. They give them exactly what they need, plus what they didn't even know they wanted. And when they tasted it, they go like, yeah, I'm not going anywhere else. So it ends up that when they travel, they seek out Hotel 101, that our Hotel 101. Yeah, the name is not the best standout because there are some other Hotel 101s that are not ours. Yes. So far globally we have 2 open properties and more opening up, so hopefully we will be able to overtake any other Hotel 101 tiny little thing, and people will not be confusing us. But yes, all these conveniences, they ensure high occupancy. We build large scale. That's what allows us to build facilities, right? So normally in 3-star segments, you would see 150 keys kind of a hotel, which just simply doesn't allow them the space for, say, swimming pool, gym, and so on. We build 500 rooms on average. This is more typical to 4 and 5-star segments. So in Niseko in Japan, we have 482 rooms. In Madrid, we have 680. In Boracay, we'll have 1,000. It's a large-scale hotels. Every single hotel 101 globally will have 24/7 front desk, which usually in 3-star segments, they shut down for the night, but ours works. Again, because we are catering to business travelers, say in Madrid, they're arriving at all sorts of hours, still need to check in. All-day dining, breakfast, lunch, and dinner, also not common. Gym, swimming pool. Swimming pool we have even in Niseko. There's only one other hotel in Niseko right now that has a swimming pool, is a Park Hyatt. It's an ultra luxury hotel, and us. Okay, so we stand out, have head and shoulders above any kind of competition in a 3-star segment, and yet we are remaining in 3-star segment because of the room size. So we are catering and we to this 3-star traveler. We don't need the staff to maintain, right? That typically you would find in the 5-star segment. You would expect to have someone at your beck and call and so on. So we don't need to spend the money to hire that much staff because we're in the 3-star segment, yet we're giving them conveniences of a 5-star segment, ensuring high occupancy rates. Okay, this one is an important one. You guys need to know this like back of your hand. This is how the model works.
Correct. So this is the basically thing where any investor or any client is going to ask the questions.
Exactly. So how am I making my money? This is how.
Right.
So at the end of the month, we combine the entire revenue from the whole building together because all rooms are the same, right? We take 30% of the top line of the revenue, not profit, yeah? No deductions of any kind of expenses. So 30% of that top line taken away straight away and split evenly among all units. So in Niseko, 482, so we split it 482. In Madrid, it's 680, so we split it 680. Then how many units a unit owner owns, how many they bought, then that many pieces of the pie they have.
So it's
So
basically a 30% of revenue sharing, right?
Yes. So what this gives us is, one, doesn't matter whose room rents out, everyone still has a share. 5 years down the road, we shut down some rooms for renovation and start to do that, right? Because hotel wear and tear, that happens faster than a regular apartment. We do need to renovate. To begin with, we are paying for that, right? But those unit owners whose rooms were shut down for the renovation, they are still receiving their revenue because all rooms are the same, because we combine the entire revenue. And two,
Right.
the split of the gross means they are not participating in any risks associated with hotel operations. So no maintenance, no repairs, no staffing costs, no GM salary, no insurance, nothing. The only thing that
basically this is not a part of profit. It's a basic total revenue which hotel is getting, right? So we are getting that 30%.
Yes. So it doesn't matter how much we pay our GM. Doesn't matter how many times we maintain our aircon or what, what we say our staffing costs are, our construction costs are. Our unit owners are only benefiting from ever increasing room rates, right? So this makes this model completely transparent. There is no space for any hanky-panky. We can't play with all those commonly played with things like management fees or something like that, right? None of that is our unit owner's responsibility, so they don't care. In this model, the operating company is on the same side with the owner, with the unit owner. We are both making money. It's not operating company against the unit owner as it commonly is, because normally they would take their expenses first. So after even those models where you can combine the revenue, right, for all the rooms, usually operating company would pay their GM, the staff and everything, right? Cover their expenses, and then whatever's left, they give.
Yeah. Hi, Dasha. Sorry to intervene.
Yes.
This is Smita from Pune. How will we come to know like what would be the total revenue?
They have report every month.
Okay.
So every month, the unit owners will receive a report, how many units rented out, for what price, because we employ dynamic pricing, data-driven dynamic pricing, so that we can maximize and play on any demand changes in the area. For example, in Niseko during winter, it's completely slammed. There is no availability there at all. So obviously, room rates are very high. So we play on that. During spring and autumn, where short season transitions, where it might be raining, there are fewer people there. We drop the rates so that we are competitive, and so on. Right. The same with Madrid. There is F1 race is coming to town, to Madrid, and it's going to be right next to Hotel 101. Obviously, during F1 race, the room rates are not just twice or three times. They're so much higher. Right. So we're playing on that. From month to month, the revenue will be different. And so every month, the unit owners will receive the report that shows what the revenue is, how much the 30% constitutes, so they can see the actual numbers, how many units this particular owner owns, and so how much revenue they are getting. In many countries, it is by law, we need to withhold tax. So in Madrid, the withholding tax is 24%, which is income tax. Our unit owners are responsible for their own taxes, okay? So we are not paying their taxes. The only sure thing in life is death and taxes. So they have to pay their own taxes, but in many countries, we have to withhold it for them. In Japan, the withholding is a little higher than the final tax amount will be. So once we paid their taxes, we refund them the difference. In Madrid, it's 24%, which is if they are not fiscal resident in Spain, this is pretty much their tax. It's very straightforward, much more straightforward than in Japan. Right, so they see all that in their report. We will not be giving them a report about how much we spend on what, right? Because they don't care anyway. This is our own business. And sometimes our buyers, more like agents actually, buyers don't care, but the agents do ask, how do we know how the company is doing? Right. So even though we are not participating in the risk, we are not paying anything, right? So we don't really need to know the exact amount. But in the contract, there is a clause that if we're not doing well, we can exit. Right. So how do we know that the company is doing well? Well, we are listing on NASDAQ. All the books are public record. So yeah, go ahead and take a look if you want to. No issues at all. So everything is very transparent. We are introducing more and more safety nets and making it as clear as possible. For us, there is no way we can fail this first, at least the very first few projects. No such option. Because if we fail even one, that's it. The whole company gone. It's a huge thing, and listing on NASDAQ is a very big step, right? So this how confident we are that this works. And it's not just because, Dasha said, Hannah said that it works. No, we've tested it out. It works. Oh, I think it's actually in my next slide. Yeah, there we go. Okay. So this is our property that is already operational in Manila. It's been operational for about 7 years. So you can see that it's working on this model, right? So when we launched it, we sold all the units to individual owners, and they're also happy with their purchase. They're not selling it. So they're all holding on to it. I have a lot of questions like, can I buy Manila? No, you can't. No one wants to sell for a good reason, right? So their occupancy levels are high. They're consistently quite high. If you go there, you'll be waiting for the lift for a really long time because they're forever slammed. This very good location there, right in the middle of the city in Pasay, Manila. The revenue returns are about the same or even slightly higher than a condo of studio size in the same area. So this is what we're aiming at everywhere we go. When we survey the site before we buy it, we run our numbers. Our yield, our ROIs have to be the same or higher than a studio in the same area, right? The ROI from the studio in the same area, because these are our buyers. They are choosing, they already know they want to buy something overseas because they want to diversify their portfolio. They can play on FX rates, or they just like that country, or they are just thinking, okay, I want an alternative investment that works for our property works like that as well. So they know that they want real estate in the area. So they'll be choosing conventional condo that they need to maintain themselves. They need to find the tenants. They need to find management company because they can't do it themselves from overseas. And there are forever issues like this leaking, that leaking. And imagine if you are buying in a country that is opposite side of the world, the time difference. Your management company calls you in the middle of the night. Hey, air leaking, it's going to be costing you this much. Okay, to proceed. And so on. So this forever stress how your property is doing. And then another COVID happens. Unfortunately, this thing is now getting more and more common these days, that some things are happening in the world that disrupting the movement. Say for something happened and the borders closed. You don't have a tenant in your Airbnb or in your apartment, but you're still paying all the maintenance costs and so on. Our unit owners don't mind because their worst case scenario is zero for the months because they're not paying anything, right? So they are choosing normal condo with all the issues or hotel 101 with same ROI and no issues.
So
I mean, it's
Dasha, I have a question.
Yeah.
So like you mentioned that suppose if COVID happens again, right, and everything is shut down, right? So in that situation also client doesn't have to pay any maintenance or anything like that, right?
nothing, no.
It should be zero for client, right?
Yeah. So if there is no revenue, then
It is
there is no income.
irrespective of the occupancy, right?
Yes, it's all spelled out in the hotel management agreement.
Okay. And suppose like the hotel is running on a like partial basis on a like 10% or 20% and at that time. So that revenue will again, that will be a 30/70, correct?
Yes, correct. It doesn't matter whether the company is breaking even or not,
Okay.
as long as there is $1 income,
That should be
30
divided
cents of
into
that
parts.
will be
Okay.
divided.
Because that is I believe much transparent also because this is a listed company. So I think there's no which is like any hanky panky because you need to mention that in papers. So that is I
Yeah.
believe this is a short thing.
Yeah, exactly. Okay, technology is a big thing for us. That's how we're listing on NASDAQ as a hospitality and tech company. So currently we have an app that allows travelers to book the hotel room, check in, upload their passport, use the app as a key, open the door, request extra towels, whatnot during their stay, check out, go, leave review, feedback to the ops team. Next, coming up, they'll be able to control their AC and lighting from the app as well. They will be able to save their preferences. So they go to another country. The moment they open the door, it's all set to their preference already. Next, sometime in the future coming up, we'll have a marketplace.
This is
where they can
wonderful.
buy and sell. Yes? Oh, okay.
Actually, Nazma said that this is wonderful.
Okay. Thank you. Yes. So marketplace will also be great because they will be able to sell and buy their Hotel 101 units when new development is coming up, and to sell, they're already selling to the audience that know the model, they're familiar with it, they've been receiving their revenue, so they're more likely to buy. Maybe they missed the boat, say for example in Niseko. It's a fantastic place, but a lot of people haven't heard of it yet. And now it's getting even louder and louder. I haven't heard of it before, before this, but when I went there, it's insane. I'm hooked. I want to go every year, but it's so expensive. It's crazy. Anyway, that's beside the point. The point being that they will have an avenue where they can easily buy and sell, but of course they are more than welcome to sell it on an open market whenever they want to. We are not locking them in at all. But having said that, need to remember this is not property for flipping. You can, if you want to, you can even reassign it before the completion. For example, now we're increasing the prices on the 1st October. Say we do some event in India before then, maybe we offer them a little discount during the event or like a bulk purchase discount or something. And then we increase the prices, they decide to flip. Can, no problem. We are not restricting them. And the only thing that will be restricting them, maybe the taxes in Niseko, right? If there is a, after completion, there is a property, not a property, the capital gain tax, right? For example. But we don't restrict, so go ahead and do it. But really, this property is not really for flipping. This is for someone who is looking for a steady revenue stream, more of a retirement plan kind of situation, insurance plan kind of thing, right? FX rate playing, not get rich fast. Okay, this is a big difference from what other developers are pitching, because we often hear very high ROIs and so on. But then when you start digging, the ROI is actually gross, and they haven't deducted any maintenance and so on yet, right? The taxes are not deducted, and then they're saying that I don't know, whatever else, right? You're gonna get rich very fast. We're gonna guarantee your returns. No, we don't do that because we are very transparent. And this is not a get rich fast scheme. This is steady growth, right? And eventually in the future, sell it with appreciation, hopefully. Okay. Unit owners will also have access to all their reports on the app as well at some point, so they can see how their asset is performing. And then when they want to sell it, they can actually use that as their data, the proof that it works for whoever they want to sell it to. Okay, so to recap, one uniform standard hotel room makes a big difference. Five times the size of the normal value segment hotel. Blitz scaling means we're selling all units. We don't retain anything. We're selling all the units, and then we take that money and we invest it into the next property. Okay, unique and innovative offering. So far, no one else in the market is doing it the way we do it, but I'm sure more will be popping up. And it's sustainable business model for all the reasons that I already mentioned, right? And technologically driven. So we're not a once-off kind of developer. We have 14 confirmed sites. Currently, Manila and Fort are already operational. Manila for 7 years, Fort for about a year already, year plus, opened August last year. Oh, year. Oh, yeah, I need to say the congratulations to them. Anyway, Cebu and Davao opening this year in the fourth quarter. We're very excited. Cebu is a special one. That one sold out super fast. It was the third one to launch, and the buzz about Hotel 101 was already pretty high. So it sold out within like a year plus or 2 years of the launch. That is really, really fast. And in Philippines, there is a limit how many, what the percentage of a new development foreigners can buy. So that limit is a 40%. Only 40% of a new development in Philippines is available for foreigners. In Cebu, they hit 40%. And half of them were Japanese. Japanese are very good with their numbers. They know what they want. And yeah, they went to buy Cebu. The location there is really, really good. Yeah. Libis, it's in Manila as well, just a little bit off the city. Started selling mid last year. Boracay is a very exciting location. We'll be launching sometime in the future, not that soon, because we're applying for environmental permits and it takes really long time there. But the site is already there. Davao, Palawan and Bohol are also beach destinations. They will probably launch before Boracay. And then outside of the Philippines, we have Niseko in Madrid that we want you guys to help us sell. So Japan and Spain, and Los Angeles will be launching after our listing on NASDAQ, after the IPO is done. Okay, so these are some pictures. This is the Manila, the original one. This is the second one that opened. You can see that the design, the architecture is already improving. It's going more towards the modern architecture. And this is the Japan. You're already receiving awards. This one was awarded the best value condo hotel.
So
And
Japan location is very, very, very beautiful because
yeah,
it's amazing look and feel.
Yeah, right. It's great, and it's so restful there.
Correct, correct. And this Madrid is near to F1 track, correct?
Correct. Yes.
Okay, both properties good.
Sustainability is high on our list of achievements, I guess you can say. We just received CASB certification for Niseko. That's the same as LEED certification. So basically, we're green. We're as green as we can be with a hotel. Right. Our social impact is always positive. We're creating jobs, unlike the Airbnb situation. So our expansion plans are really, really aggressive. So at the beginning, I mentioned it will be easy for you guys once you have the model, understanding of it, why it works and how down, and you know what the hotel room is like, right? And then it's just easily translatable. So we will have million rooms globally by 2050, presence in over 100 countries, which will make us top 5 global hotel brand, which makes it more recognizable, which makes more demand, more occupancy for every single one of them. Because again, the same room with all those extra perks that other rooms don't offer. Okay, we are listing on Nasdaq, I mentioned, by way of merger with JV SPAC company that is already listed. And Nasdaq was congratulating us on their Times Square Tower when we acquired the LA site for the Hotel 101, and then later on when we merged with JV SPAC. Yep, that's about it for the model. How are we doing on time? Do we want to go into the projects in detail or?
Not exactly. That's why, because it's already 45 minutes. And so we can go for the costing part. What is the investment ticket size? And we'll go on one-on-one product in a in second round of training.
Okay, cool.
Yeah,
Have
There are
any?
two layman questions I want to ask to Dasha.
please, please.
One is that on a layman term, what an investor is going to get in ROI in the percentage, and what are the exit plans for him? Very layman.
Right, yes.
Correct. The pricing and the
ROI.
ROI.
ROI depends on which country we are looking, because each separate project will have different ROI. And
Do we have anything in India?
not yet,
Not
but
exactly.
we're looking. Yes, we are definitely. India is high on the priority list for our expansion, so definitely coming up. Not yet.
Yes, world eye is on India now.
Yeah, let's sell this first so that we have the money to buy in India.
Right.
But
So,
yes, we're
so the
definitely.
come to the question of Anubhai. So,
Yes.
what is the ticket size and what is the ROI we can expect from Japan or Madrid
Right.
as an investment?
I think I have it here. So let me just straight up. Okay, here we go. You can ignore the first two lines. Do you see my pointer? Do you see my mouse moving?
Yes.
Yes.
Okay, cool. So these two you can ignore. Just now I mentioned theoretically you can buy a unit and stay in it yourself, right? But we want to avoid that. So if anyone wants to buy that 21 square meters and stay in it themselves, they will have to pay 63 million yen, which no one in their right mind will do. So to avoid being a security, we had to include this option. So theoretically it's optional, but not really, right? So 25 million yen discount for letting us run it as a hotel, so that we make sure that every single room in a hotel is actually run under us, right? No discrepancies. So the price today is 37,660 yen for Hotel 101 Niseko. That is in Japan, Hokkaido. 37,660. Price is going up on 1st October. This will be the, well, you can say it's the first price increase, although before we officially launched for sale in December last year, we did do a few roadshows where we had a pre-launch price, which was 10K less. So, but the first price increase anyway, since December, already going up, right? So anyone
So,
who
as an Indian currency, this is close to 2 crores 17 lakh
thank you.
for this
Yes,
size.
that's important. Yeah. All transaction is done in yen though, so now the yen is recovering. It's now or never, maybe even. Yeah, need to buy right now. Hang on. Thank you. Okay, so in lieu of loan, we have 5 payment options. There is no way to take loan for Niseko at the moment, although we are talking to some banks, might be able to do something in the future, but right now we take it as no loan possible. So in lieu of loan, we are giving internal financing, so to speak. So we are not charging any percentages, no interest rates, nothing, and we give them 5 payment options. Actually 6, we just introduced one more. It's not here yet. Okay, so
Dasha,
cash, sorry,
sorry to interrupt. The prices will be all over the same. So we buy any unit, be it on a ground floor or top floor.
correct. Yes, at any given moment, every single unit is priced the same, no matter the facing, the level, and so on. And then we increase the price, then at that moment, all units are still the same, doesn't matter. So we are retaining some higher level units right now for the price increase, even though it's not important which floor they get the unit on, because their returns are still the same, as they're absolutely equal, right? It still gives a little bit of a push. It's easier for agents to sell now rather than later, right? Because
Yes.
now they get to choose the facing and so on, and then when those run out, that's it.
And
Okay.
for Japan, how much of a foreign investment is allowed?
No restriction. So
No.
for now, both our
For
projects,
Madrid and Japan, yeah.
no restrictions, yes. So in Philippines, the restriction is 40% only, but we are not talking about those too much. If you guys want to, we can look into the Philippine properties as well, but we want to focus on the Japan and Madrid. Those are better commissions.
Correct. So what is the expected ROI for Japan property?
Okay, here we go. Never ever look at 100%, right? So this table gives you the look at what will happen if our occupancy is very low, 30%, and all the way to 100%. This is annual. So never ever look at 100. No hotel in the world can do 100 throughout the year, right? No matter how good their location is. So because we are large scale still, we are looking at 70, 80%. Right, 70–80% occupancy will give us about 4 to 5% return, right? And this is pretty much gross, as a net, pretty much net, because no maintenance, no nothing. The only thing is taxes. Okay, taxes in Japan are rather low. Income tax, we did a quick calculation, right? Again, developer is not usually advising on tax, so I will leave it with you guys to research it a little bit more, but we've done our own check with a tax accountant in Japan, and we calculated if, say, 70% occupancy, and we get the annual yield for the unit based on 20,000 yen, which is actually a very, very conservative price, because even now its average will be higher. But when it's higher, then ROI is higher, so you'll still be happier, right? But let's say it now, 20,000 yen, 70% occupancy, with all possible deductions that our accountant could come up with. And in Japan, you can do tax deductible things, right? The depreciation, property tax, the accountant's fee, and so on, right? So you can deduct all that from your tax. You'll pay 5%, if any, right? That's already like at the rock bottom, 5% only. Okay, property tax, we wouldn't know how much, because it's determined by the government, but our brokers on the ground estimate it to be under 200,000 yen. Okay, yearly. So those are the taxes that we're talking about in Japan. The tax document we did with our accountant will be in the shared folder once we've settled all our paperwork with the marketing agreements and so on. we will share a folder where you will have marketing collaterals and all the contracts so that you can familiarize yourself with those, like a hotel management agreement and the sale and purchase agreement and all those, right? Including the FAQs about taxes. Those that we could think of, we asked. Everything else, please do your due diligence and the research when you advise your clients, okay? Okay, let's see, Madrid.
Madrid.
Hi, Rasha. A small
Yeah.
question. As we are going to pay tax over there wherever we have taken the property, and again, as we are going to invest from India, are we like liable to pay tax over here also? Because once we start getting income, that falls into our account and it shows our income. So is it like, do we need to pay tax from here also? Like,
Yes, of course. Yes.
okay.
For Indian, when we receive any amount as a income to Indian account, they need to pay the income taxes.
There's
When we receive in our accounts, are we liable to pay tax from our country, receivables, on receivables?
Yes.
Yes, yes.
Okay.
No, Amit, you don't have to pay dual taxes. So if you have paid taxes
That's
for the
what I was
income
asking.
outside India, no, you can only produce the tax receipt and Indian government will give you the tax rebate. Dual taxes are not there.
Okay.
I
need to
believe
It depends
confirm.
if India
it's
India
different from
has
country to
the
country, I
treat.
believe.
Yeah, there should be a tax treat or something signed between those two countries. If
That's
it
we
is
need to
there,
check
then
with
I
the we need to check with the Japan and Madrid location if there's
Yeah.
a dual taxation are applicable or not. That we need to check.
I can't advise on that.
Or how about floating an LLC and doing the transactions? Is it suggestible, or like as an individual buyer it's good, or floating an LLC and doing the transactions?
Okay, everything done in the currency of the country. So for Japan, it will be in yen. In Spain, it will be in euros. Our buyers right now, some of them prefer to keep their returns, their monthly payouts in the account in the hotel, and then they withdraw once a year. So we don't charge anything for that. We don't charge anything to transfer monthly or once a year or whatever, right? But the bank, the receiving bank, will charge the rate, whatever rate, right? So wherever the bank is, different banks charge different things. So some of our buyers, a lot of actually of our buyers prefer to keep that first before they transfer out. And it doesn't matter what account you give us. We can transfer anywhere. Doesn't need to be India. If you have account anywhere else, we can transfer there. No issue at all. It doesn't even need to be your name. As long as you as an owner have given this permission or instruction, more like for us to transfer the money somewhere to someone else. For example, our CEO, she owns a few units of Hotel 101. Her monthly payout go to her parents. That's her way of maintaining them monthly, right? So yeah, that's possible, no issue. So anything you can come up with for your clients, you can run by us. We'll check with the ops whether possible or not, if you have any better ways to cut the costs and so on. And we are always on the lookout for tech that will allow us to do these transactions with lower cost as well. But right now, the best we could come up with is to keep the money for them and then transfer when they want to. So that maybe
Right.
at FX rates and so on.
Right.
Did I understand
And
this? Yeah.
what is the Madrid costing?
Here we go. So again, ignore the first two lines. 800,000 euro. We have 4 payment plans. In Madrid, loan is a little bit more possible. Maybe let's say we are talking to a bank, but our first case hasn't finished yet. So it's still going through. So I can't confirm that loan will be possible. And of course, it's case by case for foreigners, depends where they're coming from and so on, right? But might be. Yet still, let's say that there is no loan, so we give 4 payment options in lieu of loan. One wonderful thing about Madrid property is if buyers buy 3 units, Hotel 101 Madrid, they are qualified for Golden Visa. Golden Visa is residency by investment. So they need to invest 500,000 euro in the real estate in Spain. Not every real estate qualifies, but ours does. And then they can apply for Golden Visa. So that gives them ability to work and live in Spain should they want to, but they don't have to. That's the biggest difference with permanent residents. Permanent residents, to renew, you need to stay there certain number of months a year. This one does not make you stay there, not at all. If you are not going for the passport, for the citizenship in Spain, you don't need to stay. You just maintain your SAT, and then your Golden Visa is renewed every 5 years. First one after 3 years, and then every 5 years. So that gives you access to healthcare and education in Spain as well, and visa-free access to Schengen area. So pretty much EU. You don't need to get visa to move around Schengen area. Okay, this is a huge perk. A lot of people buy that for their kids who will be going there to IE. That's one of the biggest universities.
So this is like 1.75 crores in Indian rupees for 1 unit, right?
Sorry, say that again, Amit.
So it's like 1.75 crores for 1 unit. And if any customer is going to buy a 3 units, he'll get a Golden Visa from Spain, right?
Yes, they qualify for it. But of course, there are some compliance checks and so on. There's it does not guarantee, but it does qualify.
Okay. Yes, Nazma, you are asking something. Nama? Yeah, Nazma, you are asking something?
Yeah, I'm sorry. I actually, I had this in mind that people who are taking 3 units in any of these 101 brands are entitled to get a Golden Visa in whichever country they are investing, you mean to say?
No, only Spain.
No. Okay.
Yeah, Japan doesn't have immigration by investment option. So for now, only in Spain. The one in LA might come with immigration component, but we are not sure yet.
Okay, so it is available only in Spain.
Yes.
This Golden Visa facility or benefit, I mean to say.
Yes, only in Spain.
And what is the ROI, Dasha?
Here we go. ROI based on
ROI is
projected
good.
daily rate at the opening 150 euro per night, which is also very conservative projection. And remember, this is average for the year, so we capitalize on everything that's happening there. Around there is a huge convention center, IFEMA, and whenever anything is happening there, the hotel room rates in Madrid, they spike. Things happening there every month. So yeah, anyway, so we're projecting 150 on average at the opening, and we're again never ever look at 100%. We're looking at 70, 80. Let's look at 70 just, to be safer. 6 to 7%.
So Madrid is a much lucrative option for everyone because the ROI is good in Madrid.
Yes, that's probably because the entry point is also a little bit lower.
Correct.
But you need to remember that the tax rate in Spain is higher.
Higher. Correct.
Yeah.
Correct.
So Dasha, who holds the land of any of those hotels?
Say again.
Who will hold the land?
Who will hold the land? Okay, it's a strata title. So unit owners, they share in the
they get the land share certificate.
Yeah. A unit and a land, so to speak.
Okay.
Yes. So unit owners hold the land. So I had this question very recently at an event.
Because if you do this in Dubai, I think the land will be of governments, and you will have to have it on lease.
Oh no, freehold, and owned by the
unit owners.
Yes.
Yes, we will get the share certificates.
Yes, they have the
it's good to
title.
know.
Exactly, they have the title, the strata title, freehold strata title.
Great. So any other question related to this investment plan? Because we have a limited time and we'll come back again for individual projects training in coming days. But till now, any question related to any concept or anything like that, please shoot. Yeah, questions. Okay, so I believe there is no question, and Dasha, what we'll do is we'll create a group for this Hotel 101, and you'll be a part of that group. So you can share the all detail in that group, so everyone can reach out, and everyone can in case they have any question, they can ask in the group only. So
Yes.
it will be easy for everyone to run the show.
Perfect. And
Right.
if anyone has a buyer who potentially is ready or even just want to hear it, do reach out. I don't mind presenting one-on-one.
Right.
Once you've heard this couple times, it's really simple.
Exactly.
You will learn it already. But before then, while you're still getting your footing, please feel free.
So in
I'm
case
here
we have any client who has a approximate budget of 2 crores, so we can pitch that Madrid and Japan this option Hotel 101. So because we need to think one very simple point, because the ROI we are talking about, that is a net ROI, right? There's no maintenance, there's no deduction, right? This is a net ROI. So as a net ROI, this is a good return as on the investment, right? So thank you, Dasha. Thank you for being here and giving a wonderful presentation.
Pleasure.
Kashish ji, over to you for the next session, right? And thank you everyone to joining this. Thank you, Dasha.
Thank you.
Welcome.